Morning all. Morning Mark, morning Andy. How are we all doing this morning? Big moves so far this morning at the open. Frankfurt's opened, market's gone crazy. Big spikes on all indices this morning. US dollar's coming down hard. Big moves on the yen. Weakness on the US, weakness on the yen this morning. It's only the open though. Give it half an hour, it'll all be reversed. But yeah, good opening moves this morning across the board. So all pretty good. It's war day tomorrow, so get ready for some volatility. We'll start off with the news, then I'll do a quick recap of the trades yesterday and what I'm planning to do for the rest of this week. And some news of a new prop firm, which I'm going to look into as well. Morning Zolani, even. I used to know a girl called Zolandi. I don't even know if that's a name. Maybe it was Zolani and I was pronouncing it wrong all the time. Who knows? So today, let's start off with the Aussies. So Aussie dollar, we had news this morning. The monetary policy meeting minutes were revealed at 12:30. This morning we've got Euro economic sentiment, which I'm not going to do an awful lot, so don't worry about that too much. And we've got PPI this afternoon at 1:30. So PPI is the main thing today. We should get most of the movement today off of the back of that. And then tomorrow we've got CPI for the CAD and the pound, retail sales and FOMC along with crude. So big day tomorrow for news, but this afternoon is basically just 1:30. So nothing else there. Earnings wise, nothing pre-market. It's all aftermarket today. So Aussie dollar obviously off the back of we had a dip basically this morning off the back of the news. So all the Aussies came down a little bit this morning. It wasn't particularly dramatic. We haven't even got an ADR on them yet, so nothing particularly exciting. And obviously this morning out the gate we've got a lot of movement. There's a lot of repositioning going on again today. This market is very volatile at the moment, very up and down. As we saw yesterday in the indices, it's a very, very difficult market to trade at the moment. So just be a bit careful out there. It's a scalper's paradise, but obviously it can also cut you up a lot the wrong way as well. So just be a bit careful at the minute. So yesterday, let's start off with H1M5. H1M5 did just over 1%. Morning Rahat. That was Euro US dollar. That was a trade I closed out. That was actually a manual. Sorry, yeah, that was a manual I closed out. So I took a manual as well, and I forgot to close it, which was nice because it closed lower than I was expecting to. Morning, Diamond. So took that one off yesterday, and we also closed out Aussie dollar CAD yesterday. That was a nice little trade, 3 days and out. And Euro US dollar was the day before. So that's H1M5. At the moment, currently, we have a Euro pound long running on that one. This is H4M15. There's a pound US dollar running. Didn't close anything out yesterday. Did 3% the day before that. So pound US dollar just got that one running as a short. And obviously, at the moment, the US dollar is not very happy. So that was nicely in profit this morning. It's just come back up there. So what I'm planning to do with this one is I'm going to see what happens this morning. I'm going to hope we get a push back on the US dollar today after this initial move up. down rather. So I'm going to wait for a pullback on the US dollar, and then I'm going to escape that one, that pound US. So that's my plan this morning, is to get out of this manually when we get into profit, if I can. I'll tell you why in a minute. So there's that one there. Trend pullback. I've got a pound yen in profit and a euro odd currently in drawdown. Again, same plan on this one. If I can get to break even on these two, in fact, I might just do these two now. We're 0.9. Yeah, I'm just going to close these manually. So just close those two out manually, basically, just taking a tiny little loss on them. And I'm flat on COT bias for H4M15 as well for mean reversion. So morning, Trevor. So reason I'm closing all these out, I've turned off auto trading. I'm going flat, and I'm going flat for the rest of the week because if it does kick off this evening or tomorrow with Russia, there's high probability you're just going to blow your account. There you go, said it. So I'm not trading with the EA, and I'm going to go flat on my accounts and basically just concentrate on short-term scalps for the remainder of this week. I've banked 13% this month on that account, 6% on that account, 8% on that account, and 4% on that account. So I'm not going to chance any of this going into massive drawdown on a huge spike. We could see 300 to 500% ADR moves potentially if the invasion goes ahead. And I don't really know what could happen, to be honest. So I'd rather sit on my hands and be flat with 30% banked and ride the rest of this week out and see what happens. If nothing happens this week, Ukraine sit down with Russia and just go, yeah, we won't have NATO in there, and Russia go, no problem, and they turn their tanks around and walk off the other way. No problem. Haven't lost anything, have I? But if they do invade, the market has a massive knee-jerk reaction to it and everything goes crazy against me. I don't really want that to happen. So best situation for me at the moment is flat. So that's what I'm doing. So auto trading's turned off on that one, which is COT. Auto trading is turned off on trend pullback. And I've got one position running there and one position running there on H1M5 and on H4M15. So I'm just going to monitor these ones. I've got my other monitor up, watching what's happening with the euro and the pound this morning. And I'll see what happens today. If by the end of the day, these haven't got back into position where I can just shut them out, I might just scrap them anyway today. So whatever this is today, I will probably take a loss on it because I don't want to lose the profit, basically, and I've no idea what impact this is going to have. Personally, I've never traded through the start of World War III, so I don't really want to know what's going to happen. Yes, I could make an absolute fortune. I could also lose my entire account. I don't know. So for me, the safest thing is to be flat. So that's what I'm planning. And as I haven't got a lot on the table at the moment, it's fairly easy for me to do. So I'm going to leave those running and see what happens. So euro pound and pound US. So mainly my my trades are hinging on the pound at the moment. So I'm looking for one of them for the pound to spike up, one of them for the pound to spike down. So for me, the perfect play today is for the pound to go like that, because I just get out of both of them. But who knows? Maybe that will, maybe it won't. So that's my plans today. Anyway, I just don't want to be sitting in a dangerous situation with what's going on at the moment. There's lots of conversations going on and lots of uncertainty. We're seeing this playing out in the market a lot at the moment. We're getting really big movements in all sorts of directions, and it's aimless. You saw me trading yesterday, the open for indices. It was hideous, absolutely hideous yesterday. Markets didn't really have a clue what the hell they wanted to do yesterday, did they? So, NASDAQ open yesterday was just an absolute horrible chop fest. We sat through this, didn't we? This move. Literally, just no clue what was going on yesterday. So, and then we get all these, these big, out of the gates, massive push higher. There's this weird stuff going on. So, the best situation at the moment, I think, is to sit on the sidelines and not lose money. So, short-term scalping is what I'm planning, and I'm just going to concentrate on that at the moment and see where we go. Morning, Lorraine. Euro pound is at yearly support, so maybe euro is going to be up. I wouldn't say so. Try it. The fundamentals don't support it. Technicals do, yeah. As you say, we're at support. But fundamentally, is there anything that would reverse that coming out of Europe at the moment? No. It's all negative news for Europe. So there's nothing fundamentally that will make the euro stronger than the pound, particularly at the moment. So I wouldn't worry too much about. Technicals. It's a gamble, like everything. Like I said yesterday, yeah. And if I don't think you were here yesterday afternoon, but you have a 50-50 chance when you hit the buy and sell button of being right or wrong. Literally, that is the odds of gambling, of trading, of anything to do with putting your money on the line. There's a 50% chance you'll be right, and that will go like that. Stick a stop under there and hit the buy button. So either technicals will be right or fundamentals will be right. One or the other. We don't know which, do we? We know it's going to go up and down at some point in the next couple of weeks. So take a chance. You'll be right or you'll be wrong. But one thing we do know is it's going to go up and down and move sideways. That's all we know. So have a go. But euro, yeah. Eurozone is still weak at the minute. So I wouldn't. I can't long the euro as much as I see things like that. I can't. The very core of me knows that there are countries going bankrupt in Europe. The economy is on its backside. Even tourism is down off of COVID restrictions being released. And it's there's nothing going on that is positive for the Eurozone. So it's had a little bit of a spike, but I don't think it's going to be long term. But you're going to be wrong at some point, aren't you? This is the thing with this. Yeah, when you're trading anything, if you're trying to trade the bottom of a range, of a pullback or whatever, whenever you're trying to guess the bottom, yeah, at some point you're going to be right. Yeah, you could well be right now. I could be wrong now. At some point, everybody's going to be right and everybody's going to be wrong. We don't know when it's going to be, so you just got to take your chances when you get to the levels that make logical sense to you, really. So that's news for today. Covered, and what I'm planning to do today. At the moment, there's nothing on ADR. We haven't had enough movement this morning. The Aussies I thought might get an ADR hit this morning, but we didn't get enough movement off of the Aussies this morning. Out the gates, everything's going absolutely crazy. So either you're on it or you're not. If you're not, don't chase it. It's all gone nuts this morning at the open. So nobody's had any time to react to anything this morning. You got 5-minute candles going in like that, and people that tried to fade it are dead. It's a very, 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 very odd thing going on with everything at the moment. So I'm kind of inclined to try short-term scalps and obviously and see what happens. But Aussies were the only thing I was expecting to hit ADRs today, and there's nothing hit at the moment. So keep your eyes on those, but be very careful with any ADR hits today, because we don't know what is going on with the market, what is causing these movements. This to me looks like it's just a kind of a knee-jerk reaction to what's going on in Russia. I'm just looking at news actually, see if there is some news. Hang on a sec. Russia says southern western armies returning to bases. Russian army completed several drills and is returning to bases. Uh, 32 minutes ago. There you go. That's what's going on at the moment. Russia's returning some troops to bases after drills. Okay. Right. So World War III might be off. There you go. You heard it here first. So that looks like what's causing these movements this morning. Either way, I don't really know what is right, what is wrong at the moment. So with 30% in the bank, I'm sitting on my hands for the rest of the week, and then we'll see what happens next week. But at the moment, it's looking like Putin's pulling the troops back. So that's all good news. As Diamond has just said. So Rahat, in this situation, to stop the EA on all pairs is recommended. It's up to you what you want to do. That's what I'm doing. My situation at the moment is I've got an absolute bag of profit, and I don't want to lose it. So I've trebled my target for the month already. So I'm sitting on it. But if you want to carry on trading, You're going to see a lot of volatility in the likelihood over the next 2 to 3 days. So there'll be lots of opportunities to make money. The problem is at the moment, for me personally, you know the way that I read the market doesn't make any sense to me at the moment. Yeah. I can't make sense out of what's going on in the market at the moment because there's no market structure pattern here. The normal biases I have and everything, the way that I read the market has been thrown out because every piece of news that we see makes the market do the opposite to what it's just done. So at the moment, it's a case of just get in at some point, and at some point you're probably going to get a big spike that's going to make you a fortune, and use tight stops. That's my view of the market at the moment because, there's no reason for this sort of movement at the minute. It's just crazy. We saw it out of CPI. We're seeing big spikes and then complete 100% retracements, and then it changing its mind and going up again, and then this morning it's changed its mind and gone down again. This market is in utter chaos at the moment. You can't read a direction. It literally, if you see a big move and an RSI get extended, if you flipped a coin, you've got as much chance of getting it right as anybody has at the minute. And that's really, I think, the way all you can do with the market at the minute is play it that way because there's no logical sense to any movement. It's being controlled by rumour. So you just have to sit there and wait for the next rumour to come out. If you buy this, because it's extended down here and we're expecting the US dollar to push, and all of a sudden Russia turns around and instead of putting its armies over the borders, fires a missile into Kiev, that's going to collapse down there. There's nothing you can do about anything at the moment. If something happens in the world stage, the market is going to react to it. Which way it's going to react, you know as much as I do. So, for me, as I say, there's 3 market positions, long, short and flat. I'd much rather be flat and protect my capital, because if I lose my capital, I can't trade. So, and I've got another option that I'm trading at the moment, which I shall talk about in a minute. There is news that the Russian military has announced a pullback for some troops. Yep. Hello, family. I'd like to know the maximum drawdown for the EA. What's your account size? That's your maximum drawdown. If you've got a 5k account, your maximum drawdown is 5k if you've got 500 to 1 leverage. Market traders' dream conditions. Yeah, market makers' dream conditions. It is at the moment. The people that are going to make the money at the moment are going to be the people that can move the market. Yeah, the banks have the ability to move the market by dumping large orders. They will be absolutely clearing up at the moment. We saw that, didn't we, with the with CPI last week? It was nuts. Yeah, we were expecting a long position off the US dollar. We did that, and then the market went, actually, nah, we'll come and take all your money, everybody that's gone along with us. And then they went, nah, actually, we'll come and take all your money, all you guys that played that short. They took every single penny from every single trader within 12 hours. And at the moment, they've got news to play with. Every time there's a news announcement, they can flip it the other way and just make an absolute fortune. You've got no chance, basically. Apart from low time frames, scalping. That's literally all you can do, I think, at the minute, which is what I'm planning to do. So, I was watching the charts when the spike happens. Check the news. Yeah, it will be. It's always going to be to the minute, the news. This is why they use. This is what I keep saying about the news. The news has got absolutely nothing to do with the market. Occasionally, you'll get a fundamental release which will change the direction based on something that was not expected, and that is the news that you can't do anything about. So, the Fed say they're going to keep the rates the same, and then they release the news and they go, actually, no, we're putting 0.5% on it, and everyone goes, what? Then you get this massive move, and it's a fundamental shift as money kind of gets yanked out the market and put in the opposite direction because they were wrong. They may lose a bit of money, but then they get it right. When there's news going on like we've got at the moment, where at any second someone can press the button and go, red news, the market makers will be sitting there waiting for that, and they'll go, bang, we've got 500,000 to dump short on US dollar. Wait for the next news to come in and dump it. And everyone then jumps on short and they go, right, flip it the other way, 2 million the other way, and bang, they just make $1 million. It's done. Obviously, they do it on a much faster scale, but that's basically the way the market makers move. There's nothing you can do about it. And this is what I mean. In the conditions like this, you're either going to get chopped to pieces trying to catch the fade on that, and they're just going to chop you to bits up here, or they're going to fade it and everyone's going to go short, and then they're just going to spike it for no reason. And you just, you've got to be in and out fast. And that's where I got caught yesterday on the futures market and NASDAQ yesterday. I got chopped to pieces yesterday. What I should have been doing was in and out for 3 or 5 points at a time, bagging 100 quid every trade. What I was trying to catch was the move, and I don't think you can do that in a minute. You've just got to be so nimble. So anyway, we've got an ADR. Woo! Yo, Aussie dollar Swiss. So Aussie Swiss hit ADR. Again, off the the Aussie news overnight was negative. This morning they've completely reversed the entire thing and taken it back up and taken out yesterday's highs liquidity on everybody that went short off that move. Yeah, so lovely short Aussie dollar Swiss at the moment. Aussie is a short. Swiss franc is a long when it powers up. So yeah, lovely ADR reversal there on the Aussie Swiss. I'm not going to scalp that now because I can't concentrate on it. But yeah, nice short Aussie Swiss. You're not going to get a reversal alert on it unless you're trading M1. So you have to go very short term at the minute with these moves. Again, your reversal alerts, you got to be playing really small time frames. Probably the best thing to trade, I reckon, at the moment is M15, M1. So wait for M15 RSI extensions and get in on M1. That's probably the best thing to do at the minute. Just go really ultra low time frame. You're trading chop and you're going to get chopped out and get a load of false signals. But the ones that work at the moment, you're going to catch these. You're going to catch these propulsion candles. And when you catch these propulsion candles, yeah, out of RSI extensions, you're going to make a lot of money. So I think that for me is kind of the option at the minute. M15 H1 RSI extensions, probably really good. But I'm going to use this week to code, I think, and just obviously do the analysis for everybody, and you can make your decisions up as to what you want to do. So H4, we've got nothing again. So day 2 of having nothing lit up. All the extensions that we had on Monday morning, all these euros have all played out. Everything that's played out from last week is in the bank, as you've just seen with the EA. I've banked everything that I got into, and I'm pretty much flat. The only thing we've got extended at the moment on 4 hours is Euro Swiss, which is counter me. I don't trade long on the euro. It is playing out nicely. So we got that nice extension. We got extended sort of here at the 72, looking for a 72 bounce. We pushed down a second leg, back down into this propulsion gap. We've got a nice support playing out from there. So very nice support resistance area there. So yeah, nice looking long, but obviously long term, is a short. So for me, this is not a good one. I've got my EA set up really to short the Euro Swiss. So it's worked if you're in it. You would have got in on M15, which would have been... You'd have got an entry there. Barring that, depending on how far apart you've entered your positions, if you're position trading, you'd have got an entry there. And you've just had an entry now there as well. Sorry, hang on. Euro Swiss. No, sorry, your initial entry was here. What am I talking about? Your initial entry was there. And obviously you could have taken that. No, that's last week. Hang on a minute. Am I getting confused with this? I'm getting confused with this. Well, we're Tuesday, aren't we? So yesterday evening. That candle looks absolutely massive. Compared to where the entry was on that. But it hasn't actually moved anywhere. It's off of that low. Yeah, that's because, yes, so it's these horrible big long reversal alerts. I hate these ones where you get them spanning such a long period of time. It really throws me off. Used to having short reversal alerts like that where you get the movement happening very quickly. So at the moment, this one obviously has just come off these lows. So this is really your entry now if you want to get in on this one. But I don't like this one as a long. You've got a really good opportunity to fade up into there, which is likely to happen. But you're going to need a 125 move to the upside on euro, and I just can't. I can't trade the euro for that long. Can't hold it for that long as a long. So for me, it's not a great opportunity long. This one, I'll be looking for shorts on this one when we get back up into here. You got this gap here, which is coming up into, but this is really where you want to be trading out of there. So if we can get a pullback up into there, that's the entry that I would look to take Euro Swiss as a short. Mark, I've only got my EA set up for mean reversion. Should I also set it up for trend pullbacks? Up to you if you want to do that. At the moment I am. But I'm keeping a very close eye on the trend pullbacks. The trend pullback strategy gets into more drawdown because it's set up for shallower RSIs. Yeah, so we're trading 60-40 RSI extensions on the 4 hour. So you can get into a lot more drawdown on these because you're getting in at a very shallow pullback, and obviously it can go, as we know, up to 80 very easily. So your initial entry is quite often, if it's wrong, if we're going to get a strong move, which we've been caught out on the euro a couple of times with these, you go into much more drawdown. So you need to make sure your entries are very nicely spaced apart, and you're kind of playing a long game. These are much longer term trades, these. They either tend to be very long-term or very in-out very, very fast. So it's not my favorite strategy, but a lot of people like to trade the trend. So I'm trading it at the moment, but with a little bit of caution because it's getting into similar trades. So the trend pullback, obviously, you would have played a short there because the trend is down. Yeah, so we're using the 72 as our filter. You'd have got in short here, but you'd have got in short on this trade. So me, as a mean reversion trader, I would have got in short somewhere either there or here. In fact, I would have got in on both of those and I'd be out on the drop. With a trend pullback, you would have been in here. Yeah, so you can see how much further you get in a lot quicker. But the reason it's set to 60-40 is to try and catch the 24 bounces. Pullbacks to 24. Yeah, that one there. Didn't quite get that one. But that one you definitely would have got. But you would have also got that if you'd have been using a 70 extension. So do you see what I mean? It gets you in quicker. It's a much more aggressive mean reversion strategy. So it's mean reversion in line with trend only. Whereas I'd much rather see very, very strong move and mean revert regardless of the trend direction. But again, it's up to individuals as to what they want to do. There's lots of different options, obviously, with it. But things like mean reversion at support resistance are absolutely beautiful. So that's what I would prefer to do. But I'm testing out the trend pullback on our live account with a limited number of pairs, just because a lot of people want to trade it. So I thought I'll run an account on it and see how we get on, which is doing really well. It's done 6% this month, 17% in total so far. I've been running it since January. It's the beginning of January. So we're 6 weeks roughly, 17%. It hasn't got into a massive amount of drawdown. For me, H1M5 is a much nicer, safer strategy than H4M15 trend pullback. Personally, I think that's better. That's a better strategy. You get into less drawdown. This very rarely ever gets above 4 positions, if that, and it's in and out a lot of the time, as you see as flick through them. It's in and out quite quick. 2 days out, done. So I prefer it. I much prefer H1M5 for the EA and H4M15 with 75 as the extension, which is what I've got set up at the moment. Cautious, uber cautious. Get in there, get out there. Done. Right. Let's carry on with analysis. So there's nothing else on H4 extensions at the moment. We've got nothing much there to look at. So nothing's getting anywhere near the sort of 3070s. Euro, US dollar, and all these euros are getting close. They have been as well extended to the downside. So they're getting close for potential long opportunities again. But as I say, I don't really want to long that. Pound New Zealand is getting close to a high extension. That's about it. So there's really nothing on H4 at the moment because we're seeing this whipsawing at the minute. There's a lot of RSIs just kind of sitting midline, which, as you can see, is not really very helpful for entries. We're just getting whipsawed a lot of the time. So dropping down to lower time frames, obviously, is where you're going to get into more positions because you're going to get moves. These big, strong moves are going to get you extended much faster on the hourly RSI than they will on the 4 hourly. So you're going to get much more opportunities. So I'd be watching, if you're going to trade, I'd be watching the H1 RSI extensions and getting in on M5s. Or potentially ADR reversals at the minute, are probably your best bets. So just keep an eye on the ADR dash and the RSI dash and just use those really. But again, here we've got nothing much setting up at the moment. Everything's 40s and 50s. Literally everything is 40s and 50s. There's nothing. So, this time of year is not this time of year. This market volatility with what's going on is absolutely lovely from a scalper's perspective. If you're getting in with nice tight stops and you're playing 5 and 10 to 1 risk reward ratios, it's lovely because you're going to get these big spikes. Just look for big ranges, range lows, and scalp in at the range lows, scalp out at the range highs. That's the best play, I think, at the moment. Everything else, we are just seeing complete indecision in the market, and the market changing its mind literally on the flip of a coin and a red news event. The market is just going back the opposite way. So it's just impossible to gauge any long-term directional bias. So I'm not going to try. We'll wait for this all to calm down. But if you want to trade, as I say, my opinion is H1, M5, or M15, M1. If you want to be, if you've got the time, obviously, if you can. It's even on M15. Look, Oh no, sorry, that's not changed over, is it? Changing the time frame doesn't change your dashboard, Lee. Wake up. I was just going to see if there's. I've got an M15 set file. I'm not sure if I have. Yeah, I have. So yeah, M15s, Euro Swiss again. See, that's a nice trade for me. Euro Swiss short. There's loads lit up. Look. M15 RSI extensions. You got Euro Yen extended to 75. You got loads extended to 70.30 as well. So these, I think, really at the moment are the nice short-term opportunities. So Euro Yen really nicely extended. Drop down M1 reversal alert short. Tight stop. 10 pip stop. If you get stopped out, you get stopped out. But look at the potential reward on this when they put the next spike in. It's 5-1. It's a no-brainer, 5-1 to come and fill that gap in it on M1. M15 is just basically a fade. Look here, exactly this. Market indecision. We don't know. The next red news event comes out, it's going to plonk it back down there, you know. So just be careful at the minute. Just getting my owlies back. Mark, understood. Thanks for taking the time to explain. I will stick with what I am doing. Mark, the answer is if you stick with what you're doing, if it's working, stick with it. Yeah. Don't try and change something that isn't broken. Is the rule. Rahat, in mean reversion, if close the fourth position manually and profit, will the EA open the fourth position again if it goes the same level? Yes, it will. So if you manually close a position, the EA monitors your positions. Yeah. So what have I got on here? Euro pound. Yeah. So Euro pound, the last buy price is there. So what this does is it looks for the last buy price taken by the EA. Yeah. So if you were to close that position out and there was another position there, that will change to whatever the last position taken was. So yeah, you can manually close if you want to, but I wouldn't recommend it. I'd leave it, let it run, let it do its thing. The difficulty with closing a position out manually with the EA is you'll get that move down, and then the EA will not be able to take you out of the position and close the whole thing with a profit because you will have taken profit too soon. The point of the EA is to take the human part out. Yeah, the human part is I'm going to close it because I think it might be moving against me. That's where everybody goes, oh, I'm going to close it. And then it goes, whoom. And you go, oh, it went exactly where I want. And that makes you just as cross as if you did anything else, doesn't it? If you take off too soon and then you see price collapse to where you wanted it to go to, that makes you just as angry as if it comes up and stops you out. So that's the whole point of this. And this is why I have it running on a VPS. I check it twice a day and I don't look at it. Because I don't want to look at it. If I look at it, I'll start mucking about with it. If I start mucking about with it, I might as well be manual trading, which is what I do as well. Anyway, so, but up to you. Yeah, you can close out if you want to. Andy, I took a look at the Fibbo extensions after longer time frame breakers, and it's uncanny how many times the market reaches 168 extensions. Yes. Great entries possible with RSI extensions. Yeah, so the fibs, the 168 is, I haven't got 168 on here. So the 168 extension is very, very, very good. If you get that V-shaped recovery, 90% of the time you will find you'll get that 168 hit. but you'll get a lot of that along the way, which is where everybody sort of jumps out of their trades. But yeah, the 168 is a very, very, very good target if you can hold it. But that's the problem, is holding it, isn't it? Which is what most people can't do. They can't do the hold part. But yeah, if you look at, let's try and find a move. That hasn't played out yet, has it? Let's go to a higher time frame. This is the thing at the minute. It's really hard to find anything that is going to work textbook, really, because the market's in such a mess. But yeah, if you're playing the 38 pullback on this move, for example. In fact, that's not the move, is it? The move is there. So if you're playing the 38 pullback on this move, you really should be getting into this and holding it until 135.8. But this is the problem. You'll see this go like that and it will break that high, and then you'll see a huge bearish engulfing going in like that, and everyone goes, "Oh, I'm out." And then it goes a massive bullish engulfing and it just steps up to your target. Because we watch the charts too much. There's not a lot you can do about that, is there? But yeah, they are brilliant 168% extensions if you can hold them. Great, you take. Can you take a look at pound yen and pound US dollar? Yeah, pound US dollar and pound yen. So pound yen is a long at the moment. Again, absolute nuts at the moment. Technically, the pound is a long. Technically, the yen is a short. If anything goes on with war, yen is going to be a massive long, and this will collapse. So, as you saw here, problems, worry. Actually, we're not so worried. No, it looks like Russia's not going to invade. Oh, Russia's going to invade. No, it's not. Yes, it is. No, it's not. That's what you're going to get. So, for me, it's a long. We've just broken new highs. So market structure on this at the moment, we've put in new highs. We're pulling back. So again here, fib wise, if you stick a fib on this, the other way around. Yeah. There's your target, 161,658. Beautiful 50% pullback on the move. And a lovely bounce. But this is the thing. Normally, I would look at this and go, technically, that's beautiful. What I know is, at the moment, this has been caused by a news event. So, I don't know, technically, whether that is right or wrong, or whether that is a knee-jerk reaction to the news, or what is going on. So, take it with a pinch of salt. If you've got conviction in that the market makers made this move based on the news of war, regardless of whether it's a war or not, then yeah, perfect. It's a 24 bounce, 50% retracement, market structure bounce to the high. Pound US dollar is a short for me at the moment, because I'm expecting the US dollar to power up. But again, no idea at the moment. You got a reversal alert next to a reversal alert with moving averages completely sideways. This thing is going nowhere. I've no idea. Flip a coin. It's a long or a short. You got 50-50 chance of being right either way. It's either going to break that low and go short, or it's going to break these highs and go long. I don't know at the moment. My conviction is short, because I'm expecting US dollar strength to come through. But at the moment, I don't know when. So I can't really give you any sort of indication as to what's going to happen with that one. But you see where I've got my fib on that move for the pullback. But then let me just take these fibs off. So my fibs are back to front. we'll start measuring from the start to the end of the move, whereas it should be the other way around. That is where I'll be looking if we're looking at the 61.8 extensions. But yeah, back down to these lows initially is what I'm looking for. So we're in a long-term downtrend pound US dollar. This to me is a pullback. So if we scale out on this one, yeah, this is a deep pullback on that move. So the market structure is short. You can play it down to there, back to there, back down to there. But interim, we've got a pullback going on, which was looking beautiful. Yeah, so we were having a lovely pullback last week to the 38 level, ready for a push. We got CPI, which completely screwed everything up, and it all went a bit wrong. And now we've got God knows what happening with Europe. So your guess is literally, guess is as good as mine. If we're going to carry on as expected, I would look for that. So we're kind of going into a contraction at the minute, and it's going to break at some point. Indices are pumping, are they? So we'll have a US dollar coming down further probably. Yeah, not a massive amount of movement there. Well, I mean, the indices have pumped. They're not pumping at the moment, but they have pumped. Yeah, starting to push a little bit more. Yeah, actually they are. Yeah, NAS is going again. S&P. So next leg potentially starting. So symmetrical triangle contraction. Next leg up. 125 ADR today. Potentially, but as I say, I'm not really going to chase this today. I've missed the moves today. I tried to get in on some this morning, but I didn't have time, so I banked a little bit of profit, tiny little bit of profit this morning, 0.5%. But I didn't really have time to trade these this morning. I kind of got the right direction out the gate, but I didn't hold them because I had to do the live room and had other things to do, and wish I had have held them, to be honest. But I don't want to chase at 100 ADR. Yeah, the DAX is at 100 ADR already today, and it's done that literally in half an hour. There's every opportunity this thing's going to go absolutely screaming skywards this morning. But if you get in up here and you try and chase this, you're likely to get chopped out quite a bit. So from a swing perspective, you could take one and try and play the second leg with a stop under there, but it's kind of likely it's going to come back and fade today as well. It's going to fade either that move, or it's going to try and fade the whole lot at some point. So, but you know, at the moment, as I say, I just don't know at the moment. It's really, really difficult to give any kind of forecast because you don't know what's causing this, whether this is being caused by Russia or whether this is being caused by just normal market movement. But looking at the indices, remember we've been looking at the drop, so not necessarily on the DAX, but we're expecting next leg down, aren't we? Yeah. So we broke those lows. At the moment, we're putting in a 3-bar reversal on the daily. Yeah. So it's completely the opposite to what we're expecting to happen. It's just complete confusion in the market at the minute. It's just it's just almost unreadable. Market structure potentially shifting back for a long based on our initial projection short. So, you know, if in doubt, get in very, very quick scalping. But today, we obviously got a very, very nice push to the highs. So my plays this afternoon in New York will be shorts. Assuming that we get this continuation this morning, if we can get this market pushing up this morning and coming up into this accumulation, which is going to be 125 to 150 ADR, I'll be shorting the hell out of this this afternoon. I'm looking for it to come back and fade all the way back down to there. But I'll see where we get to. every possibility we might just fade this today and then look for a push later. It's, very hard at the minute. When the market moves so much, when the indices are moving so much in London, it makes New York quite often very, very difficult, because we will get these accumulations in New York and rotations, whereas we're used to having all the movement in New York. It doesn't tend to happen after a big London. So have a think on that one. But I'll be back this afternoon anyway. Going to trade futures, which brings me on to what I was going to say is my next point. There is a new prop firm in town for futures. Rahat, if reversal already formed and we're a bit late to attach the EA to the chart, after attaching the EA, can the EA place a market order? The EA doesn't do market orders. Well, it does pending orders, but it works on reversal alerts. If you've missed the reversal alert, no, you can't. You have to go down to switch to a different time frame, basically. If you're too late. So yeah, there's a new prop firm in town for futures, which is very interesting. It's kind of the love child of Lilu and Topstep. So I've signed up with them this morning, and I'm doing a little evaluation just to see what they're like. So I don't know if you've heard of them, but they're called Elite Trader Funding. I'm not affiliated with them in any way. Just go and check their website out. Google Elite Trader Funding if you want to have a look at them. But they're different, and the reason they've caught my attention is because they have all the best bits of Topstep, all the best bits of Apex and Lilu, plus their own little unique spin on evaluation. So if you're looking to get into futures, these guys are well worth a look, especially at the moment, because they have a 50% offer on all evaluations. But the thing that has attracted me to them is two things. Let me start and I can show you actually. No, don't do that. Sorry. There we go. That's one. So the thing that attracted me to them is that there's 3 different types of evaluation that you can do. You've got the normal 2-step evaluations, yeah, which is exactly as Topstep work, yeah. So you have 2 steps. You've got the 1-step evaluations, which is how Lilu and Apex work, yeah. The big difference is here, yeah. So this is monthly. This is monthly, okay. So it's the same sort of monthly fee, and you can do resets with them, yeah. So you're allowed to do resets. But the big difference is the 2-step evaluation is run over 15 days. So you have a 5-day evaluation for step 1, and then you have a 10-day evaluation for step 2. But the major difference is, and I think a lot of people are going to like this, intraday realized profit is what trails, not unrealized. So at the moment with funding evaluation, you start with 100k, for example, and you have a 3k drawdown. Yeah, so you can go down to 97k, right? If you on day 1 trade like an absolute loony and hit 97k, it stops. You're out. You can't trade anymore. Yeah, and that's the normal. That's how I passed my Apex. That's how I passed my Lilu. That's how I originally passed my Top Steps and FTMO fundeds. With the realized intraday profit, if you start with 100k and you have a 97k maximum drawdown, if you trade like an absolute lunatic and take this down to 85k and then bring it back up to 105k by the end of the day, you're still in the game. Yeah, because it's realized profit, closed profit. So if you went into drawdown by 15k and then came back and pulled it up into 5k of profit, you're still in the game, which is not how the others work. So this is a game changer for intraday where you go wrong, basically. So a lot of people fail because they go full tilt So they basically screw up an evaluation, they reset it, they go back in and think, right, I'm going to get this. So they double their account size and their contract size, and they go mental and they just get it all wrong. If you did that, this actually doesn't punish you for it. And this is the only company now that's doing this. They're brand new. I've no idea whether they're good, bad, or indifferent, but I thought, hey, what the hell? So I've gone with a 150k evaluation on it, just to give them a test drive, basically, to see what they're like. And obviously, as you know, yesterday I did a 1k loss in my Apex account. So with the market as it is at the moment, I thought I'll take a step back from my Apex account and take a couple of days off, and I'll trade this afternoon. And we'll have a play, and we'll have a see what it's like. But there's lots and lots of things you can trade with it. But that's the main difference. You've got this two-step evaluation with realized profit, which is trailing. The other account size or style they have is what's called fast track. So you've got to trade for a minimum of 10 days. So basically what you've got to do is hit your target within 10 days, and you've got a maximum of 14. So as long as you can hit your target quick, and within that 14-day period, you basically don't have any monthly fees. You basically pay a one-off fee, 125, and you get a 100k account with 3k drawdown and a 6k target. If you can do that within 10 days or within 14 days and minimum of 10 days, you're done. Yeah. So it's like $300 a day. Yeah. If you've seen me trading in the live room, it's not difficult to make $300 a day with minis on the NASDAQ. If you can stop yourself. Yeah. Get to 300 and stop. You can do that at the open very easily. So these are just one-offs. You don't pay a monthly fee, but there's no resets. If you blow it, you start again. Yeah, and there's no discount. This doesn't work on these. Yeah, but they're half the price of the normal evaluations anyway. So 250. So a $250,000 account is $250. A $250,000 account is $500. But at the moment, with that discount, you get that for $250 anyway. It's like Lilu. Yeah, and Apex. I mean, it's the same as Apex. My funded account with Apex, Adrian. But this, no one else is doing this, as far as I know. So that might be a game changer for people that struggle to pass evaluations. Because it means if you like I say, if you have a really bad morning and you dump 2.5k in the morning, you've got 500 left to play with. With this, you've got whatever you like. You could say, right, I've gone long 5 contracts all morning, and I've got that. So in the afternoon at the New York session, I'm going to go 15 contracts long and see what happens. And it will go into drawdown by 2, 3k, and then it will come back and it will make you 5k, and you'll go, yep, I'm out, done. You won't blow your account because it's not realized profit. So interesting one. Anyway, I've stumbled across those this morning while I was reading my morning emails and stuff. So I thought, yeah, I'll have a go. I'll just stick a new account on with these guys. So I've gone for the... what did I go for? 150. I've gone for... What did I go for? The one step, didn't I? Yeah, I went for the one step 150k. So I've got 5k drawdown. But this is unrealized, so I can't trade like a loony. I don't want to trade like a loony. But yeah. Are you allowed to trade using EAs? You can't, because you've got to trade on NinjaTrader. I mean, you can build an EA for NinjaTrader if you wanted to, yeah. But no, this is not Forex. This is not MT4. This is NinjaTrader. Rhythmic. My Forex funds, no, not tried them. There's loads out there. I mean, go and do due diligence, but I like futures. So for scalping, I much prefer to scalp indices and futures. Reason being is because there's no spread. It's fast and you can make money very, very quickly. With CFD trading, I can trade just the same way in CFDs as well. But I don't you can trade futures, you can scalp Forex futures, but they're so slow. I mean, you don't really want to trade Forex futures. But yeah, normal trading. My Forex funds, there's tons out there. I mean, literally, I started doing a spreadsheet. I got to 50 prop firms and I stopped because I thought there's no point. I was trying to do an evaluation spreadsheet for prop firms, and the spreadsheet got so long I gave up. Really did. There are so many. Literally every week there's a new prop firm popping up. So yeah. But yeah, so I'll trade this later. This elite trader. I've traded it this morning already. I've done $500 this morning on the open. Trading full size NASDAQ contracts. So I'm already $500 into my 6K target. No, hang on. 9K target. This morning. But that was just me testing the platform in Rhythmic and making sure it was working. So but yeah, but go and check them out if you want to. Elite Trader Funding. Elite Trader Funding. I don't know how good they are, but if I pass the evaluation, we'll find out, won't we? And I'm holding onto my account with Apex, obviously, but I had a bad day yesterday. I don't really want to trade my futures account at the minute because the markets are very difficult to read. So, and the other thing, obviously, which is good about these, from a funded account perspective, where's the? There we go. So I don't know if you're aware of this, but it's the same with my Apex account. You have a trailing drawdown in evaluation. Yeah. So it trails you all the way. So if you screw up and have a bad day just before you pass, you'll blow your account. When you get funded, it doesn't work that way. When you get funded, you have a fixed trailing drawdown. So if you start with a 50K account, when you take it up to 55K or whatever it be, this stops. Yeah. So your trailing drawdown actually stops at your account size. So once you get your proper funded account, like I've got with Apex, as I start building profit, my drawdown doesn't collapse. So if I take this account up to, in this case, 70K, I've now got $20,000 worth of drawdown to play with. So once you get your account and you build that buffer, it helps you trade more freely, and these guys do exactly the same thing. And that's one of the reasons I prefer futures from a prop perspective over CFDs, because all the CFDs work this way. Yeah, your trailing drawdown is always there. So if you have a good 2 to 3 weeks, yeah, and then have a bad week, you blow your account. In futures, if you have a good 2 to 3 weeks and then have a bad week, nothing happens. Yeah, big difference. Once you've built a pot of cash, you've got it. So if you take a withdrawal on this and you withdraw down to there, you've still got 10K drawdown to play with, which is a massive difference, being able to take 10K out of your account and still have 10K buffer. And you don't get that with any Forex prop firm that I'm aware of. In fact, I'm not sure actually CTI do, but CTI's evaluation period is 3 months. So again, they've all got their pluses and minuses, and this is why I was doing this spreadsheet, to find who's the best for each individual case. And what I came to the conclusion was there isn't. It's down to you as a trader. What do you want out of a prop firm? You'll find one out there that does what you want. You've just got to go and find them. And there's so many. And there's so many small ones cropping up all the time. I don't know how long they'll be around. I don't know how long these guys will be around, but their business model is the same as Lilu and the same as Apex, as far as I'm aware, where they give you a demo account, you go and play around with it, and as soon as you pass it, they pass you off to a prop firm, and that prop firm will then take you on. They don't fund you themselves. They are just literally finding traders for a prop company. I don't know who their prop company is. It doesn't actually say. But when you get funded, you'll find out because it'll be in the contract. So anyway, so that's what I'm going to do for the next week. I'm going to start trading that because the market is in a bit of a tiz-was at the minute. So if you're not in the UK, tiz-was is a bit of a mess. And we'll see what happens. And if you're younger than 30, you won't know what tiz-was is. So, so I'm showing my age and where I'm from here. Aussie dollar Swiss has just hit ADR. So we had a nice reversal there, and we're pushing up again for a second leg. So again, look for some drops on those at some point soon. Good to see a new firm. But is there any also for Forex spot? No, they don't do Forex. Not future that you can introduce or worthy trying or worth trying. I don't. Yeah, I mean, I don't. The reason I got my Apex account was because I didn't want to trade my own money in futures because you need a big pot. I've got a 30k Forex account that I trade. To go into futures, I'd need to use a good 2/3 of that as my bank. So yeah, Trevor Lamb's Saturday morning show, was showing your age, Trevor. So that's why I got funded with Apex, basically, so that I could get my hands on a decent amount of cash to trade futures with without costing me. That Apex account, it took me third attempt, so I probably spent $600, but I've now got 100k liquidity to play with. So, and obviously I don't like trailing drawdowns that follow you. So with my Apex account, that trailing stops the same way as it does with that new company. So we'll see what they're like. They may be good, they may be bad, but for the sake of $125, I'll give them a crack and I'll let you know. I've made more than $125 this week, so there you go, I've paid for it. So that's all I've got for you today, guys. There's a couple of ADRs being hit. There's nothing on the hourlies. The 4 hourlies, we've just got Euro Swiss at the moment. And as I say, I'm going to try and get myself flat this morning if I can on these, on the Euro Pound. Pound US, is that US dollar strength coming through now? Let's have a quick look. Yeah, we've got some US dollar strength coming through at the moment. And of course, Swiss franc's weak this morning. Pound's not particularly weak. So that looks like that US dollar strength. So I'm going to close that one out as well. Manually, Pound US. Flat. So the only trade I've got running is a Euro Pound long, which I don't hold up much hope for because I'm going long on the Euro. But hey, I'm going to see where this one is end of day. I've got 4% in the bank at the moment. So I will close that one out today. And then see what happens. Yeah, and then I'll restart the EAs next week when things have returned to normality. I just don't want to see one of those spikes. Yeah, I've been caught on the back end of bad news, and we get these daily candles, yeah, like that. If you're the wrong side of one of those, and it is something that is going to last, like a war, you could quite easily see it literally just accumulate and push against you, and accumulate next leg, yeah, and you just don't want to be caught the wrong side of that. So just err on the side of caution this week. Right, that's all I've got for you today. I've joined one called Funded Trading Plus. Not heard of that one, Adrian. Funded Trading Plus. As I say, there are loads of them out there. And basically all these guys are, these prop firms, yeah. Top Step fund you themselves. CTI fund you themselves. FTMO, as far as I know, fund you themselves. A lot of the other firms out there that you see, all these other prop firms, they don't fund you. What they do is they find you and they get their money for finding you through your evaluation fees. They then pass you on to a prop firm, a prop desk, and that prop desk will then take you on. Whether that prop desk will actually fund you with real money, or they will fund you with a demo account to start with that you think is real money, is down to the prop firm. Because the prop firm will look at your P&L in depth. They will look at your trades. They will look at how you handled your evaluation, and they will decide whether or not you're worthy of funding. But the vast majority of professional prop firms out there that are going to stick real money behind a trader, they're going to want more than 10 days of trading history. Yeah. And that's where people like CTI are different. CTI, if you don't know them, City Traders Imperium, they are a Forex, and also they do indices now as well, prop firm. They require 3 months in their evaluation. Yeah. So Daniel, who runs that, he's not stupid. If you can prove that you're consistently profitable for 3 months, he'll give you some money. Otherwise, do one, basically. Because you're not consistently profitable unless you can trade consistently profitably for 3 months. So there are certain firms out there that will properly fund you with their own funds, but they want to see proper track records. Anybody that's giving you money within a week and turning around within 24 hours or 72 hours and giving you 100K, just use your head. Yeah, that's not real money most of the time. And Top Step have a two-stage evaluation. The two-stage evaluations obviously mean you've got to go through the process for longer. So those guys are much more legit as well. But, just, use your head. 95% of traders fail, and they pay $300 to $500 for an evaluation. The average person that passes an evaluation spends $1,500 doing so. Yeah. Then you get a 3.5K drawdown. Yeah. So that one person out of 100 or out of 20, for example, that passes has paid $1,500 to pass that. The other 19 have paid $1,500 to fail. That's where the money comes from that pays the winners from the losers. All those prop evaluation fees where you try and get a funded account, all of your money is going into a pot and it's paying the guys that are funded. Most of those aren't trading a real funded account with a lot of the firms. Some of them are, but a lot of them you'll find are not. And it's a great business model, but be careful with the prop firms, because some of them you'll find will be there and disappear very, very quickly, because they'll be spending too much money on advertising and not enough money on fees, and they'll disappear. So we'll see what happens with this new one. As I say, the website looks great. Their back end is all set up really nicely. It's all very professionally done. They've spent a lot of money getting this up and running by the looks of things. So I've got faith in these guys, but they're new. So we'll see what happens. But I'll trade that this afternoon. I'll need to get my Rhythmic account set up on this machine, and we'll have a go at that one this afternoon. All right, so be aware of news this morning at 10 o'clock. In quarter of an hour, we have Euro economic news. Doesn't tend to move the market much. Pre-market, before I'm on at 2 o'clock, we've got PPI. That's the market mover today, if we're going to get one. So be aware of your US dollars up until then. And obviously, anything you see happening in the market today, news spikes, etc., check this out. Because obviously, you'll find most of the time any news spikes that we're seeing are obviously going to be in here. So any spikes that we see are going to be news related. So keep your eyes peeled and just stay safe at the minute. Be very cautious with what you're getting into. Lower time frames. All right, so I'll be back at 2 o'clock. We'll have a look at what's happened this morning, and I'm going to do a bit of coding this morning, and then this afternoon I will be trading that futures account, and we'll see what we can do at the open this afternoon of New York. All right, so have a good morning, and I will see you 2 o'clock.